Welcome to your freebie ticker video update for the end of first quarter 2008. Folks, as you can see, we have a very bearish little trend line here that's been going on. This is a weekly chart, 50, 100, 200 week. As you can see, the stick saves have come fast and furious when we violated the 200. That's because all the technicians in the world are watching it. Oh boy, and the Fed has to come save us. Listen, folks, the Fed can't save us. The economy's going to the toilet. Look at the employment information. Look at the fact that everybody was crooning about all the HELOC money taken out. Well, guess what? Now all the HELOC money is gone. Nothing bullish here, guys. It is going to get far, far worse, I believe. And this is not going to be good. Look, short-term target, intermediate-term target. We're talking end of first quarter. You know, we original target was end of second quarter. We would see 1220. We got damn close to 1220 in the first quarter. Still think we're coming here in the short to intermediate term, certainly by the end of the second quarter, and I believe that we could come as far down as 1070. Notice, guys, that to get to 1220, we do not have to violate the channel. Okay. Next stop down here is probably this congestion area here. This was a broadening megaphone. It was actually a retrace of this move and turned out to be prescient. It augured for an advance, and of course we got one. This will be the next congestion area to watch after we get down here at 1220. There will probably be stops here in the upper 1100s too, by the way, in 1170, 1150ish. But again, once we start to get down here into this 1070 area, that's where I start to look for a real base to be built. If we fail there, we're going to end up back down here. All right, there's really nothing underneath this area that's going to hold this market up of any substance until we start to see, sub 1,000. All right, so I mean, this is a very, very bearish scenario that we would find ourselves down here. Not going to be this year, guys. We're talking 2009-ish. We get a Democrat president, and hey, who knows? All right, I want to show you something that I have put up in the ticker and have made an issue out of before. This is the 20 and 50 week moving averages. Again, guys, it's got you out of the market here right near the top in 2001 as we rolled into 2001. And then again, this is on the S&P 500. It got you back in the market in the middle of 2003, and it took you out of the market right here the first part of February. And the rule is 1%, okay? Keeps you from getting whipsawed. If you go back and you look at this on Profit or some of the other charting systems, you'll find that this performed very well all the way back to the days of the Depression. Why don't you see this on Bubble TV? Because if you saw this on Bubble TV, there'd be no reason for you to watch Bubble TV, right? All you could do is, if you're a long-term investor, you're in the market when you have a positive divergence here, and you are in cash when you don't. That's all. And guys, the whole key to making money over the long term is avoiding these. Okay, it is not this. This is easy. Buy the S&P 500 and sit on your hands. What you have to do is avoid these, because this is what destroys your return. If you can be out of the market for these and in the market for these, you will make lots of money and make an absolute monkey out of most of the so-called active managers. All right. Looking at the Dow Jones Industrials and all of the other basic indices, we've got the same basic pattern everywhere. All right, we'll go to the one-year chart. Look, same basic pattern everywhere. This is a typical bear market rally. You get these huge pushes up over the 50-day moving average. Let's go get our regular moving averages up here again. There we go. Big pushes up over the 50, just enough to suck everybody, and then they fail and crush you. Last week, guys, if you bought this, you're underwater significantly in the Dow. Same deal on the NASDAQ. If you bought this, you're either flat or actually down. You look at the Russell, same story here. Either flat if you bought right at the beginning on Monday, or you actually have lost money. And of course on the S&P 500, anywhere that you bought last week on the upside, you're down by a significant amount. If you got in at the very beginning, the 1330, you're down 1%. Anywhere up here, you're down even more. If you unfortunately bought the top of this blow off, all right, you are down about 3 to 4% right now. This is not funny if you actually bought into this and then it rolled over on you and you didn't immediately bail on it. So again, no good long positions here. We are definitely in a downtrend. By the way, guys, if you're interested in seeing these things on an everyday kind of basis, all the time, most days about 20 minutes worth of commentary on the markets, head over to tickerforum.org. You can get yourself an account there. It's a great discussion board. Wonderful people. We talk about the markets every day, all kinds of things, bonds, stocks, metals if you want to, God forbid, commodities, the economic outlook and what's going on. Great group of people. I think it's the best investing forum on the internet. Of course, I'm biased seeing as I run it. And if you make a donation to the forum in an amount that gets you gold donor status, which you can find from the FAQ on the board, you will get access to a special video tab where you can see high definition, high resolution videos. Most days, whenever I put them up, they're out there. They're there for you to either view or download at your choice, and we now have them in 3 separate formats. We have them in WMV format for those of you on Windows who want to watch them on some kind of Windows Media device. We also have them in the embedded flash format. And finally, for those of you that have iPods and other Apple-friendly things, we also are now doing them in an iPod-compatible format, which is an MPEG 4. All 4 are up there on the daily updates when they are made available. Normally only the flash file on any of the quickies that go up during the middle of the day, and those don't happen all the time. Again, guys, these are donations, not a subscription. We're not guaranteeing that they're going to be there. I'm the one doing all this work. I'm not making you a promise that you're going to have updates every single day or anything like that. But for those of you that want the video commentary, it is available. It is out there for those that want to help support the site. But again, if you don't, listen, the forum itself, free, no obligation. Come on over, sign up, get yourself a username and a password, join the discussion. Let's find a way to tame this bear and make some money. That's the goal, right? We all want to be on the right side of the trade. Let's put our heads together and make that happen. Again, economics, guys, you tell me where there's something bullish in the economy. Don't listen to Paulson, don't listen to the clowns. It's not going to happen. The reality of the situation is that we have a horrible problem. The HELOCs are going to be next, and the auction rate securities mess are going to be next. That's the next shoe to drop. Watch for it into the second quarter. Watch for the employment situation to continue to deteriorate. I expect we're going to see more of that. There will be more intervention by the government. It won't work. It never does. And when we get to the bottom, you'll know, because we'll start to see the actual spending numbers improve. GDP print is likely to be negative for the first quarter. If it's not, it'll be darn close. And we're going to start getting confessionals. So that's where we are. Hope you're on the right side of the trade, and I will see you around.